And welcome to After the Bell. I'm Parikshit Luthra. The top story this evening, the coronavirus epidemic could get out of control. A dire warning from the World Health Organization as the deadly virus is spreading faster outside China. Stock markets across the world have simply nosedived with 571 new cases. South Korea once again outnumbers China. In fact, China reported only 327 new cases as of yesterday, the lowest number in over a month. Over 55 countries have been affected so far, with Netherlands, New Zealand, Lithuania and Nigeria reporting their first cases today. So the virus has now reached sub-Saharan Africa and is present in 6 continents. The spread in Europe is causing alarm, with England, France and Germany reporting new cases. Italy is the worst hit European nation, where nearly 700 people are infected and 17 are dead. Germany has also reportedly quarantined about 1,000 people at their homes in western part of the country. Here are reports from Tokyo, Singapore on the impact across Asia and the world.
A decidedly negative picture across the Asia-Pacific markets as investors fret about the global spread of coronavirus. A number of key indices across the region now falling into correction territory, and you can see it's been a particularly rough day across the Asia-Pacific markets. In correction territory, that includes the Hong Kong market, down more than 10% from its recent high, but you can see negativity right across the Asia-Pacific markets today. The Japanese market, the underperformer in the region, the Nikkei 225, down by 805 points, or about 3.7% at the close after that more than 4% sell down that we saw on Wall Street. This week alone, the Japanese market shedding some 9.6% over just the past 5 trading sessions and is off more than 10% from its recent high. South Korea also ending the session weaker, down by 3.3% on the Kospi. The Kosdaq down by about 4.3%. This week, the South Korean market off over 8%. Korea reporting an additional 256 cases of coronavirus in that country, bringing the total there to more than 2,000 people. The Australian market also correction territory there, ending the Friday session down by about 3.25%. This week alone, we're down by 8.3% for the Australian market, but we are off more than 10% from the recent high. The New Zealand market ending down by about 1.5% after the market closed. That country confirming its first case of coronavirus, which is a 60-year-old woman who had recently returned from Iran. New Zealand market closing before we got that news out on that coronavirus outbreak. That is the latest on the Asian markets this Friday. Back to you.
Japanese Prime Minister Abe took drastic action to contain the outbreak by announcing the closure of all public schools starting next Monday. And this has triggered panic and criticism among working parents as they scramble to secure childcare or find ways to work from home. And critics say Abe's unprecedented move was motivated as government support waned, as well as to keep the 2020 Tokyo Olympics this summer on track. Now, Tokyo Disney Parks operator Oriental Land announced that both Tokyo Disneyland and Disney Sea will close through March 15th, in line with the government's request to avoid holding big events for 2 weeks. And it will be the first time the parks will close for an extended period since 2011, when a massive earthquake and tsunami hit northeastern Japan. Now, many other public events have been cancelled, and concerns are mounting as it seems inevitable that there will be a significant economic impact felt in the days ahead. That's all from the Nikkei.
Saudi Arabia is pushing for deeper production cuts when OPEC and its allies meet next week as the coronavirus outbreak has crippled demand. The Financial Times reports the kingdom is asking producers to agree to a cut of an additional 1 million barrels per day. The Saudis, they would account for the bulk, while Kuwait, United Arab Emirates and Russia, they would split the rest. The operator of Tokyo Disney is closing 2 theme parks through March 15th. To try to limit the spread of coronavirus. Oriental Land says that policy is in line with the Japanese government's request to cancel or postpone big events for 2 weeks. This is the first time Tokyo Disney has been closed for an extended period since an earthquake and tsunami hit northern Japan in 2011. The outbreak also hitting the auto sector. Hyundai has shut down a factory in South Korea after one worker tested positive for coronavirus. The move disrupting production of popular models such as the Palisade SUV. Hyundai is not giving a timeline to reopen that plant. Shares falling 5% today.
Global markets are witnessing a serious meltdown as coronavirus spreads to more countries. This has been the worst week for markets since the financial crisis as investors scramble for safety. Wall Street witnessed a massive sell-off in the last session, with Dow plummeting nearly 1,200 points, its biggest one-day drop ever. In Europe, all the major indices are trading with deep cuts. The German DAX is down by over 5%, French CAC down close to 4%, and the British FTSE also down nearly 4%. Moving on, Dalal Street was no exception. Over 11 lakh crore in investor wealth getting wiped out in the last 5 days. It was the worst weekly loss for the Nifty in percentage terms in over a decade. Sensex lost over 1,400 points and the Nifty is now just above 11,200. All the major indices ended in the red and there was simply no place to hide. Anuj Singhal is here with a market wrap.
Well, just one of the worst weeks that the market has seen for some time. It was a big sell-off in global equities. Most major indices were down 3.5% today, and we were down 7% for the week. Just the kind of carnage that one feared we could see is something that we have seen. And the worst part is we don't know if this is the worst of it. Cash market volumes were extremely high. All through this week, we have seen some large FIs selling. It looks like that perhaps continued today. The Nifty futures on the first day of series through the day today traded at 50-point discount. That's telling you the kind of selling that this market is seeing. Well, it's pointless talking about stocks because everything was down, but still, I would try to talk about some. Essentially global plays. So you have Vedanta, Hindalco, Tata Steel, auto plays. Tata Motors is both auto and globals. That was down quite a bit. Mahindra and Mahindra was down. I think what also broke the markets back today was the selling in big IT names, because so far IT was the safe haven. But today you had names like Tech Mahindra, Infosys, HCL Tech, all take quite a bit of tumble. NBFCs were down, Indiabulls Housing, Larsen & Toubro Finance, Piramal Enterprises, across the board. Now, there are 2 or 3 burning questions here. First is this a global bear market? I don't have an answer to that. I don't think anyone has. But this is a serious question which needs to be asked. Because so far, what everyone is asking is, when will the market bottom out? And what is the good time to buy? What are the good levels to defend? And I think these are wrong questions. The question one needs to ask is that, is this a global bear market? And if that is the case, then how do you survive this bear market? Because right now, there's a bit of a buying freeze in this market.
All right, thank you, Anuj, for joining us. We have been speaking to several global and Indian market veterans to find out what do they make of the global market meltdown triggered by the spread of the coronavirus. Here are some of their views.
Forecast for China by 0.5 percentage point as a result of the virus, we should see a much bigger impact on earnings than that 0.5 percentage point. We view India in terms not entirely, not very much impacted by the virus, which hasn't yet had much of an impact on India directly. For India, it's more domestic factors that drive our view, which is fairly neutral on the market within an Asian context.
It's not yet been officially called a pandemic, but it's clearly shaping up to be a global pandemic. And, if I look at India, I'm concerned. I don't know what the preparation in India is. Is India counting that somehow magically it'll avoid getting hit by this pandemic? We don't know how it's going to play out, whether it's going to be just a supply chain impact or it's going to be shutdown of cities and economies and all of these, the primary and secondary and tertiary effects that could happen. We have no historical basis for it.
I think the U.S. is completely underestimating how many potential cases they may already have and could have in the future. And certainly that's borne out by how few number of tests they've actually done. The case fatality rates are significantly lower than we've seen with other pandemics like SARS and MERS.
Time for a quick break. On the other side, Lata Venkatesh's interaction with Helen Ray of London Business School on